So in today's video, I want us to look at preparation of manufacturing accounts. Remember, manufacturing accounts are prepared by those organizations which are engaged in a manufacturing process. It means that these organizations buy the raw materials and convert those raw materials into finished goods. These finished goods are then sold in the market. Actually, manufacturing accounts are an extension of the trading account. These accounts are always prepared for the following purposes. First of all, a manufacturing account is prepared to find the cost of the goods that are manufactured. Then also the other purpose as to why you prepare the manufacturing account is to calculate the amount of any profit on the manufacturing process. We have a sample question here, which is for the ABC Limited company. We want to see how we can use this information to prepare a manufacturing account. They are telling you that the following trial balance was extracted from the books of ABC Limited, a manufacturing company, as at 31st October 2012. You have your trial balance, which has the debit as well as the credit columns. You have return inwards and outwards. You have carriage inwards. Then you also have the carriage outwards. We have the carriage outwards as well of 113,000. Then you have the discounts received and discount allowed. Don't forget that discount received is an income and discount allowed is an expense. Then you have plant and machinery at cost. Then you also have the accumulated depreciation on the plant and machinery. Then you have dividends and capital. Then you have the sales revenue. You have inventory, 1st November 2011. Remember, under manufacturing accounts, these manufacturing firms have 3 categories of inventories. We have inventories of raw materials. We have inventory of work in progress, as well as the inventory of finished goods. Then in addition to that, you have the factory wages as well. Then you have office salaries, salesman salaries and expenses, as well as the general expenses. You have lighting expense, rent expense, insurance, bad debts written off, advertising and promotion, distribution funds at cost, accumulated depreciation on the funds. Then you have AM bank balance. This is a debit balance. Then you have PM bank balance. The trial balance shows that this balance is on the credit column. So this bank balance represents a bank overdraft, since the balance is on the credit column of the trial balance. Then you have cash in hand, trade receivables and payables. Remember, trade receivables, these are current assets to the business, and you expect to see the trade receivables balance in the debit column of your trial balance. Then the payables, being current liabilities, their balance is on the credit column of the trial balance. You have purchases of raw materials, that is your trial balance. Then you also have some additional information given inventory at 31st October 2012. You have the inventory of the raw materials, which is 870,000. You have inventory of finished what? Inventory of finished goods. Then there was no closing work in progress. Then we have depreciation for the year is to be charged as follows: plant and machinery, that is 15% on cost. Then you have distribution funds at 25% on reducing, 25% on reducing the balance method. Then on that is not 31st October 2012, we have insurance paid in advance. That was shillings 45,000, and general expenses unpaid were 225,000. 225,000. Then in addition to that, you have the general expenses, and these are to be apportioned 80% factory and 20% office. Then lighting and rent are to be apportioned 4/5 factory and then 1/5 office. Insurance is to be apportioned 3/4 factory and 1/4 office. That's a quarter office. Then note 7, distribution funds are used for sales promotion activities and delivery of goods. At the start of the financial year, ending 31st October 2012, the directors agreed that the manufactured goods should be transferred at cost plus 15%. What are we required to do? Prepare ABC Limited's manufacturing account, clearly showing the prime cost, the factory cost of production, and the transfer price. Then part B is all about coming up with a statement of comprehensive income for the year ending 31st October 2012 for internal use, distinguishing between gross profit on manufacturing and on trading and administration and distribution costs. Then part C, prepare the statement of financial position as at 31st October 2012. So you see, that is your information. They have given you the trial balance in this question. And at the same time, you have some additional information given, that is from note 1 to note 8. And then you can see the requirements of the question. You're required to prepare the manufacturing account, clearly showing the prime costs, factory costs of production, as well as the transfer price. Then coming up with a statement of comprehensive income for the end of 31st October 2012, as well as the statement of financial position. So that's what we have. We are going to use this information to come up with our manufacturing account. Remember, a manufacturing account, as I told you already, that it's prepared, it will arrive at the cost of the goods that have been fully manufactured, as well as to calculate any profit, if any, on manufacturing. So let us see how we can come up with our manufacturing account for this ABC Limited company. So, of course, you have to come up with the heading, of course, and I will write ABC Limited is this should be ABC Limited is manufacturing account. So ABC Limited is manufacturing account for the year ending 31st October 2012. So that is our heading. That is our heading. So that's our title. Of course, I can try to divide my page. Just want to be trying to come up with my different columns for the amounts. Okay. So that's our manufacturing account. I'll come here, put shillings, thousands, shillings are thousands, shillings are thousands. Now, the main features of this manufacturing account, you'll find that we have to look at what we call the prime costs. And don't forget that prime cost is the aggregate of the direct materials, the direct labor, as well as the other direct costs. Then we shall look at the factory costs, work in progress, as well as the factory profit. And then finally, we shall come up with the market value of the goods that have been transferred. So we start with information about the direct materials. Information about direct materials. So when you look at through the question, you'll see that you need to get the opening inventory of the raw materials. We need to get the opening inventory of raw materials. Opening inventory of raw materials. According to our question, the opening inventory of raw materials is 1,200. So I'll get that. Then on this opening inventory, I'll have to add the purchases of raw materials. Purchases of raw materials, and our purchases of raw materials is 10,800. So I'll have to add that. Then still, when you look at the question, you see you have the carriage inwards. So I'll also add the carriage inwards. Carriage inwards, these are transport costs incurred when transporting these raw materials, maybe from the suppliers to our business warehouses. So there are costs that are incurred on the purchase of raw materials. These are transportation costs. So you add them to the purchase of raw materials. In other words, they increase the cost of the raw materials. So you have carriage inwards, which you add, and this is 240,000. So I'll have to add that. When I add all this, 1,200 plus the 10,800 plus the 240, you come up with 12,240. So we have that. However, you'll see that you have the purchases returns. So you purchased raw materials, but now you're returning back some of the materials to the suppliers. So there will be a reduction of return outwards. Return outwards, we have 2,700, which are minus. Then I'll also deduct our closing inventory. The raw materials, and you find this from the additional information, which is 870,000. So when we minus the return outwards, in case we minus the closing inventory of raw materials from our 12,240, we come up with what we call the cost of raw materials consumed. Cost of raw materials consumed, and this cost of raw materials consumed, when we do the mathematics, we come up with 8,670. 8,670. That is our cost of raw materials. That's our cost of raw materials consumed. That's our cost of raw materials consumed. Then after getting the cost of raw materials consumed, we normally add the direct costs. We add direct costs, and under the direct costs we add, sometimes you find direct labor, you'll find other direct costs like royalties, costs like factory wages, and in this case we have factory wages. So factory wages is a direct cost, because these are directly attributed to the production of goods or services. So remember, direct costs are those expenses that can be traced directly to a specific product or service. So in this case, a factory wage is always paid to workers who are involved in the production process. So this would be considered as a direct cost, because we can directly relate it to the production of goods. So we add those direct costs, and in this case we have the factory wages. Our factory wages, according to the trial balance, we have 5,550. When we add this to the cost of raw materials that are consumed during the production process or during the manufacturing process, we come up with what we call the prime cost. And your prime cost in this case is 14,220. That is your prime cost figure. So this is one of the elements of the manufacturing account, or what we call the features of the manufacturing account. One of them is the prime cost, and prime cost is the aggregate of the direct materials and direct labor, as well as other direct costs. So the aggregate of all those direct costs, the materials, the direct labor, and other direct costs, the aggregate is referred as prime what? It's referred as the prime costs. Now, after coming up with your prime costs, you have to look at another feature, which is the feature of factory what? Which is the feature of the factory overheads. Factory overheads expenses. Factory overhead expenses. That is your next feature. This is your next feature. So we are going to look at those factory overheads. These are expenses that are incurred during production, but indirectly. So those factory overheads, we have to present them next after the prime what? After the prime costs. So I'm still continuing with our manufacturing account. I need my 3 columns here. This is our second column. So that don't forget our amounts in shillings and thousands. So if you don't have the question, you first summarize the question, which I shared at the start. Then you try to follow. You try to look at the question as well as following my answer. So under the factory overheads, of course, you'll see that we have the general expenses. We have the general expenses. We have the general expenses paid. When you look at the question, the general expenses paid were 3,200. However, your additional information shows that some of the general expenses were accrued. Some of the general expenses were accrued. Some of the general expenses were accrued. So we have to add the accrual. So we add accrued general expenses of shillings. That was 225. This is an accrued. When you add this, you come up with 3,420.25. But according to the information given in the question, they are telling you that 80% of the general expenses are to be apportioned to the factory. So meaning that times 80%, this gives you around 2,740. So that is factory. Then you have the lighting expenses. Lighting expenses, 360, no adjustment. However, we are required to take 4/5 to the factory and 4/5 of 360. That is 280. That is 288. Then the other expense we have is the rent expense. Rent that was paid, 225 was paid. 25 was paid. However, to the factory we take 4/5, and 4/5 of 225 is 180. Then you also have the insurance. So I have insurance. When you look at insurance, there is insurance paid of how much? We paid 750 of the insurance. But when you look at the additional information, you will see that there was some insurance that was paid in advance. Insurance paid in advance, we have to minus that. So I will say this insurance prepaid. This insurance prepaid. Insurance prepaid was 45. This belongs to the next financial period, so I'll have to minus this. So you'll come up with 700. 700, how much? You get 750 minus 45, that is 705. 705, according to the additional information, that we shall take 3 over what? 3 over 4 to the factory. 3 over 4 to the factory, that is 529, approximate 529 when you round off. This is 529. Then you have plant and machinery depreciation. Depreciation. Plant and machinery. This is something which you can calculate. You're calculating depreciation on cost. So I'll get my depreciation rate, which is 15%, times the cost of the plant and machinery, which is 57,300. And this gives you how much? This gives us around 8,595. Those are the factory expenses which we have, the factory overheads, in other words, which we have. So you have to add them and get the total. So when you add these, you get your total factory costs. Okay, total factory costs of production. First add, when you add the factory overheads, I think you'll come up with a total of 12,332, which you have to add to your prime costs of 14 to 20 to come up with a total factory cost of production of 26,552. That is the total cost of production. In other words, that is the cost that was incurred to do the production. However, we have to add the opening work in. We have to add the opening work in progress. Remember, work in progress is the cost of those items which remain incomplete at the end of the accounting what? At the end of the accounting period. So the opening work in progress is to be added to the total factory cost of production. So we have some opening work in progress in the question. So I'll say add. We say add. Add the opening work in progress. This is given as 900. So I will have to add 900 to the factory cost of production. Then you have to less the closing work in progress. But according to the information given, they are telling you that there was no closing work in. There was no closing work in progress. So we can just put a dash in the closing work in progress, because we don't have any figure of closing work in progress. Okay, so I'll say less closing work in progress, which we don't have. I'll just put a dash. So when we get our total factory cost of production, we add the opening inventory of work in progress, we less the closing inventory of work in progress, then we come up with the cost of goods already manufactured. When you do the additions, you come up with 27,452. That is the cost of the goods that were fully manufactured. So sometimes you find that the goods manufactured during any period are transferred to the trading account, either at the actual factory cost, or sometimes they are transferred at the market value, or what we call an inflated price. So according to the information given in the question, they are telling you that, if I'm to take you back to the question briefly, they are telling you that at the start of the financial year ending 31st October 2012, the directors agreed that the manufactured goods should be transferred at cost plus 15%, at cost plus 15% markup, meaning that the manufactured goods are transferred to the trading account at their market value. So it will be a cost plus a 15 plus a 15%. So in this case, those goods are transferred at cost plus a markup. So there is a manufacturing profit, which I'll have to add on the cost of goods fully manufactured. So we say add. Add the manufacturing profit. It is 15% of the cost markup. Profit percentage on the cost of the goods produced. So 15% of 27,452, and 15% of this is 4,118. So when we add this to our cost of goods fully manufactured, we shall come up with the transfer value. Transfer value of the manufactured what? The manufactured goods, which is 31,570,000. So that is the manufacturing accounts. As I told you at the start, that this account is always prepared to find the cost of the goods manufactured. And in this case, the cost of goods manufactured, as you can see, we have our cost of goods manufactured, which is 27,452. So that's one of the purpose of preparing this account. And sometimes this account is also prepared to calculate any profit on manufacturing. And our profit on manufacturing is this. So when we get the cost of goods fully manufactured plus the manufacturing profit, we come up with the transfer value of the manufactured goods. So these manufactured goods are to be transferred to your trading account at their transfer value of shillings, 31,570. One thing you need to know, or one thing you need to note about this manufacturing account is that we have different elements of costs. Which we have to look at when coming up with the cost of the goods manufactured. So under this we have to capture our information about the direct materials. We have to get information about the direct what? About the direct labor. We have to get information about the other direct costs, things like realities. Then when we add all this, we come up with what we call the prime. We come up with what we call the prime cost. Then on the prime cost, we have to add our factory overheads to come up with the total production costs, on which we have to add the opening what? The opening work in progress, and then we minus the closing work in progress to come up with the total costs of the goods fully manufactured, on which you add the factory profit or the manufacturing profit to get the marketing value of finished works, of the finished goods. So you have to know that under the factory overheads, here you may find things like rent, you may find insurance, as long as they're incurred under the factory, depreciation of plants, you may find items like factory power, salaries of factory supervisors, etc. So that's the manufacturing account. That's how it can be prepared, and according to the information we have for FBC Limited, that's how you can present your manufacturing account. In my next live video, I'll show you how we can come up with a statement of profit or loss, as well as how to come up with a statement of financial position. So I'm stopping here. The main aim of this video was to see how we can come up with a manufacturing account using the information of FBC Limited. Thank you for watching. I remain Senior Hannington. Share this video to your other friends if you believe that they can benefit from this video. Please keep sharing. Don't also forget to subscribe to my YouTube channel, because a lot is coming. I'll make more videos about the different areas of accounting and so on. Thank you for watching. Bye bye.